Vincent with Top Producer Radio, talking to Jerry Golke with Strategic Marketing Services. And Jerry, lots of things happening in the markets this week, and first and foremost is the big international story of swine flu. Are we looking at something that could really impact the ag industry long term here?
Well, there's the psychology part of it is that it's called swine flu, and right as of now, there's no evidence that it can be gotten or spread through the meat. It's more of a person-to-person type thing. And I think what happened was that years ago, somebody contracted this who happened to work on a hog farm or something, and anyway, that's how it's got its name. And of course, right away, anybody that isn't a farmer thinks I better not eat pork. So we saw the first thing happening with Sunday night with many of the world traders selling anything that hogs would eat, assuming that there may be massive liquidation or something, and that type of thing. So the meal went down, soybeans, and of course corn, and now I think probably as the media finally grasps this type of thing, that it'll help the hog stabilize the hog futures. But the underlying thing, I think, is the restraint of trade that we have out there with not only the not buying of U.S. sourced pork, but also the curtailment of travel that is affecting energy. And this morning we looked at a chart that showed what happened when we had SARS epidemic a while back, and we lost a lot of energy on a per year basis. That would make the surplus of energy even that much more, and of course that means more crude oil and lower prices, and of course more competition with ethanol and that type of thing. So it all kind of breeds together. And I think the underlying thing in this whole thing is the economic situation in the world. This is the last thing we needed to affect the agriculture, let alone the rest of the world as well. So
on a scale of 1 to 10, how would you rank this on your level of concern for a ripple effect that could really impact the ag economy?
I think probably a 5. If we haven't got anything serious by Friday, or certainly by the beginning of next week, then I think we're probably out of the woods and we'll be able to tell that from the future side of the hog market.
And defining serious by trade restrictions?
Yeah.
Okay.
Yeah, more trade restrictions, or level 5, I think, by the World Health Organization, which is really critical then. And of course, we'll have to see it spreading more. And of course, if you get a few people in the United States dying from it, well, then uncertainty is a problem in these markets, and then people will question, are we going to need all the grain we produce in the world? And of course, I don't think that has a long-term effect on it, but in the short run, we've got to worry about these our planning progress and the lack thereof, and all the water we got out here, I guess.
Well, you wanted to touch on that as well. And that's a nice segue into the planning progress. What did the numbers yesterday tell you?
Well, we're behind like we were last year, and I think what the traders and I ride the elevator with some of them and talk to them, and they'll say, yeah, farmers always complain about not getting the crop in, but we turn our back and bingo, here they plant 40% in a week. And they've been burnt a lot of times in the past with weather scares and planting delays, and lo and behold, the 24-row planters and all that we come to the rescue. And last year, I just looked up our chart from on planting progress for the last 5 years, and of course, last year we were behind pretty much all year, and we were planting corn in North Dakota into June, late June, and it made it. It was wet, but they got a crop out of it. So the general perception is with the genetics and so forth, you can plant a little bit later and we'll get the job done. I think in the next week, coming next week, we're going to see where we would normally be 50% planted, we're probably going to be 33%, and the week after that would be the critical one where we normally are about 72%. And we'll probably we won't be anywhere near that probably unless it just breaks open and in a planning window. And if our 10 to 15 to 30-day weather outlook is anywhere near close, it says we're going to have delays through well into May. So I think by the time Monday rolls around, if not sooner, the market will look at it and say, wow, what if we don't plant 500,000 acres of corn? And I looked at the supply and demand looking forward, and if you drop the planted acres from what the government expects us to plant, about unchanged from last year, drop that about 500,000, excuse me, and you could get carryover under a billion bushels under pretty conservative estimates, leaving ethanol alone and livestock feeding about level with this year. So we're not out of the woods in this thing. So somebody looking forward is going to start to look at this thing pretty soon and say, yeah, we're late, we got it in, but what's our chances of getting an average yield with the crop being as late as it is? We made it last year, but very few of us out here think we can do this 2 years in a row. If we can, then we're not paying near enough for Monsanto's corn.
So we're looking at the swine flu. Kind of the big stories right now would be swine flu, planting progress, and acreage.
Yes, and I think we have to watch the market to see what it tells us, because it's you really need to see some movement in the corn market to get it higher again. You know, we started out higher today, and it seems like we just can't seem to hold anything. Soybeans are down. We had a lot of people long the July beans next to the November beans and saying Argentina and the crops over there are dropping. I think this uncertainty just got some of these guys out of the market and said we're going to back off and let's just see what happens. There are rumors today floating around that China has canceled or is in the process of either rolling forward or canceling a cargo or two of soybeans. I've talked to people in Europe. They say there's nothing commercially on the commercial side to indicate that that's happening yet. And the crush margins in China would indicate that doesn't make sense economically. Would China do that politically? I don't know, unless they know that if they cancel two cargoes, they'll be able to buy beans for $1 bushel less. So this is an underlying problem that I've seen in China for a long time, in that they're controlling nearly 50% of the world trade in beans. It's like saying that you had one person that, you had one subscriber to top producer, or two of them, and one guy was controlling half of your revenue. You're pretty much at his mercy. It's not a good situation for us to be beholding to one entity like that. They buy most of our debt, and now they're buying most of our soybeans, and they can pretty much run our ag economy like they may try to run our global economy as well. So it's you'd like to have it spread out over a lot more people, but unfortunately we don't have any other people that are other countries that are that big. So as China goes, so goes our bean market.
And couple that with potential cuts in pork exports to China as well.
Yeah, and the good side about that is that the reason they can cut them is that they're growing exponentially in their own hog situation. We've looked at some corn usage, and they're going to increase their usage of corn through their hogs and so forth significantly, to the point where at some point I think they have to buy corn from us, but that isn't on anybody's mind this year for sure.
All right, that's Jerry Golke with Strategic Marketing Services. Jerry, thank you very much.
You're welcome.